My name is Pauline Shangett, and I'm Chief Strategy Officer over at an instant crypto exchange, liquidity, and infrastructure provider called ChangeNOW. Basically, in a few words, we serve as a middleman between a retail user and both centralized exchanges, for example, like Bitget, and decentralized exchanges like Uniswap and CakeSwap and others, to create a simpler way to basically invest into things for people who don't really want to deal with like a security for DeFi protocols or the complicated interfaces of centralized exchanges. And yeah, we've been doing that for a very long time. And right now, what I feel like I am very much into retail. Been studying retail for a long time. We feel like we're finally getting into like a massive retail boom of Web2 users coming into crypto and enjoying all the benefits of Web3, like again 24/7 hour trading, easy investing, self-custody, so on and so forth. So basically earlier this year we decided to kind of hop on that. So we have integrated xStocks as an easier way to add RWA into our platform. But right now we're working with Ondo Finance to give our users an easy, seamless, and simple way to invest into a wide variety of real world assets.
Awesome. Well, thank you all for sharing. So to dive right into it, would love to just start with a question for everyone. What is one breakthrough that you think has happened in the last year or so that has allowed for us to now see the liquidity happen on chain and open us into these 24/7 markets? Gracie, do you want to kick us off?
Sure. I would say what primarily drives the tokenization of the RWA real-world assets is a very friendly regulation and compliance framework, especially in the U.S. Actually, on our platform, Pauline mentioned a few service providers on the space. We do work mainly with for example, tokenized US stocks. We've listed Ondo stocks, we've listed xStocks, and that includes more than 200 US stocks. And then on commodity side, we've listed Tether Gold, which has surpassed 1 billion market cap in total. And then on the pre-IPO space, we've collaborated that with Republic Crypto. We know these folks for a long time, like Carlos from Securitize. They built tokenization sort of idea for 5 to 7 years. But it's only until 2024 and after that where we started to see them really deliver. And that's why in 2025, we started to integrate all of them and distribute them. I think that's just a very strong message from the current administration, from SEC, FTC, etc. That they made it very clear that they want the U.S. to be driving lots of innovation. The current regulators being very friendly to all these sort of blockchain tokenization experiment, and we are happy to mainly take that exchange role or distribution role. Actually, if you look at our users today, I shared with the crew earlier that Q4 last year, on those 90% of the trading volume came from us. It's 90, not 19. And primarily the users who are purchasing or trade those tokenized equities are from Asia. That's why I'm dressing very Asia purposely today to tell you guys, we want to be a good distributor for RWAs, for those asset classes, and we do have a very big customers. Although Bitget is very global, but honestly, the RWAs sort of volume we see a lot coming from Asia. Yeah.
Taran, you also have a global perspective on this, I'm sure.
Yeah, I mean, I absolutely agree with Gracie. I think the main reason for institutional capital to move at scale, I think over the past couple of years, there's definitely been regulatory clarity. I think we've seen that in the US, and we've seen it kind of from a global perspective as well. And even if you look at the language on how that's evolved over the past, say, couple of years, we've gone from crypto, we've gone from then to crypto assets, and now we're saying digital assets. I think a time will come when we're just going to refer these to assets, And regulatory clarity is actually really important for institutional capitalists to feel both comfortable, but also they have the ability to move at scale when it comes to real world asset tokenization. And that's something we're seeing on our side at Kula. When we're having conversations with either governments or when we're having it with, say, institutions like, say, a family office, their conversations actually changed. I remember, for even regulators, 4 years ago, it'd often be a case, and, we're laughing in the back, often actually be a case of trying to explain what Bitcoin is, why it's not a Ponzi scheme, and explain, well, actually, digital assets will have a place within our financial institution in the years to come. And now that language and that thought process is changing, it's becoming less about the why and the more about how we can actually implement digital assets into our financial infrastructure. And I really think that's where we're going to be heading over the next couple of years.
Yeah, definitely. Dominic?
For me, as a company that builds consumer finance infrastructures, I think the biggest breakthrough was that it's not technological actually. It's more of how people start perceiving stablecoin as a very convenient form of payment for whatever they want to spend on. So it became, all the payment rails, technological solutions, different solutions though, have been there for the last, I would say 4 to 5 years. But how can I say, allowing them, like letting them start using them for the things that they want to buy, have become much, much easier, or easier to be perceived. That there was no emotional restrictions or frictions for them to have a wallet and have a stablecoin in it, along with other digital assets. So it became really easier for us to design our trials. Of course, we're not going to be like, back in the days, Web3, native, degen, like crypto, UI, UX. But even without that, it's been really easy to convince average users, like non-crypto users, to have the crypto asset, especially stablecoin, and start spending on our FATF.
Yeah, I'd love to dive into that more soon. And then Pauline, go for it.
Yeah, sure. I think I would like to agree with Gracie here, because as anybody who's been in cryptos for the past like 6, 7, I'm sorry, for the past 6 or 7 years, you have probably seen that people have tried tokenizing basically all kinds of stuff ever since I think we realized that releasing tokens on blockchains became a thing. But now real world assets and other like asset classes have become a lot very legitimized because of Nasdaq's push to allow for trading of on-chain stocks and commodities and other asset classes. And we've got the Genius Act in the US and the Clarity Act. And I think all of this legislation is finally pushing institutions to make real world assets more consumer accessible because it is an enormous market. So yeah, I think if it were not for institutions, we would still be trying to tokenize like Lamborghini steering wheels or like, what was that? I remember my friend told me this very funny story when they were trying to tokenize coal mines in Mexico because they found like diamonds in them or something like that. The project was called Maya Preferred. And they like made up an entire story about it. And when he was telling me this, I just thought it was hilarious and kind of like an amalgamation, I think, of all previous attempts to tokenize basically what is real world assets right now.
Yeah, definitely. And you started to allude to all of this. There's this new side of commodities, right? And these non-traditional sides of assets. And so, Dominic, why don't you share a little bit more about what you guys are doing with like Pokemon cards, digital trading collectibles, and where is the yield coming from and where is it going?
So Pokemon cards have been, as I said, the most beloved single collectible category, more than any other asset classes in the same category. So we're starting with Pokemon cards to tokenize and introduce the latest technology to the very beloved market. So, you know, allowing them to trade 24/7, allowing them to buy and sell, on your desktop, without having to go to car shows, without having to go to local car shops, without having to meet someone you randomly met on, like Reddit or whatever. You just have to be on your desktop and trade assets or buy, sell assets, like you do with your other assets like Bitcoin, Ethereum, or stocks or hard tokenized stocks. So we want to introduce that atmosphere and provide actual liquidity to that high demand asset class. In order to, by doing so, I think we can achieve a lot of different things. They will finally meet the actual liquidity they deserve, the asset class deserve. There will be much more inflow of capital that will be, diving into this very asset class. Because we are building these infrastructures, there are already, a number of investors, like institutions, who want to start building the Pokemon cards portfolio. And I think that will, bring tremendous value to this asset class and open up the untapped market of that asset.
Definitely. And Taran, you're in the real world, investment side of things. How are you guys tokenizing these resources? And also, can you share some use cases around it that we could relate to?
Yeah, sure. I mean, I don't think ours is quite as exciting as the open cards. But no, what we do is actually quite different. We actually invest into, I think Pauline.
Yes.
Yeah, Pauline mentioned gold mines. We actually invest into mines. So our first proof of concept is a limestone mine out in Lusangazi, Zambia. We've also recently invested into a Boda driver company, slightly different to natural resources, but important nonetheless, out in Kenya. And it's probably, the easiest way to explain what we do is probably through an example. So for anybody that hasn't heard of Boda drivers, think of that as like the Uber in Kenya, and it actually makes up approximately 4% of Kenya's GDP. We've invested, we have secured equity in the underlying company, and we tokenize the governance around the actual particular asset or the company that we've invested into. Now, this is the key, and often when we hear about tokenization, it's on-chain assets. Like, I know everybody's probably heard of US Treasuries, or it's been, non-bankables like Pokemon cards. But what we do is we bring in these the indigenous communities that live around the assets. We bring them into governance, and so our use case is, yes, we secure underlying equity in the asset, but we tokenize the governance around the asset to then bring in the local communities to then into decision-making power and voting power as well. And that's incredibly important when you start discussing, natural resources, mines, particularly in emerging markets like, say, Africa and Asia, where often the local communities that live around these mines, they're not included in decision-making processes. They're often exploited, and so we give them a means to then be part of the decision-making process. So slightly different when we talk about tokenization. And yeah, I mean, it's been incredible so far.
Yeah, that's super interesting. And I mean, Pauline, you were touching on all this a little bit. I know you feel that like crypto is no longer optional, right? Like this is a statement that is just, it's going to happen. It's here, it's happening now. So what are you seeing and how is this impacting consumers on your end?
Well, first of all, 100%. I think we could, again, in this current cycle of the market, we can kind of separate two avenues where consumer crypto is going to be, again, mandatory, I think, for everybody. The first thing is going to be stablecoin payments because, again, with the mass migration of workers, they do need to send money abroad to their families, for example. And there's no easier way to do cross-border payments than with stablecoins. And this is going to be one part of the big push to retail. And the other part, again, that's going to be real-world assets because you will be surprised how many people don't really have access to any type of broker who would allow them to invest into something that is a lot more stable, again, than, for example, like investing in altcoins. Because I've had friends who were like who had to try super hard to buy just like a lot of, for example, silver through a fairly shady broker, and now they can buy 0.1 of that same lot for significantly cheaper because, let's face it, we're millennials, we're Zoomers, we are the poorest generations and basically in history. And the fractionalization and self-custody of real-world assets have democratized investing by a super wide margin, especially in countries, for example, like in Eastern Europe or in Africa or in Southeast Asia. And I think that's wonderful. I'm super excited for what the future is going to bring, because I already had to teach so many of my middle-aged friends, including my cousin, who's like 40 years old. He's never touched crypto before. But I've had to teach him how to P2P trade on Binance because he had family in a different country. So he didn't really have any access to, just like sending money through a bank transfer, because it would take a long time and there's borders at play. So it's a whole mess, but I finally see the light at the end of the tunnel, and I think it's super beautiful.
Yeah. And Gracie, you were also backstage sharing that you're also doing a lot of education, and you have this term that you like to use called Finance Plus. So like, what does that mean, and how does that tie into this narrative as well?
Sure. So in crypto world, there are a few terms that we use to define the future of this industry. There were Web3, blockchain, crypto is used like changeably, and sometimes people got really confused, especially even disappointed by the term of Web3. Because if you think about Web3, it is built on the assumption that the world is Web2 and the Web3 is better because Web3 is decentralized. There's like SocialFi, GameFi, sort of like technology evolution. But what is Web3 really delivering? There is no SocialFi app that's comparable with TikTok, Facebook. There's no GameFi project that should spend like 50 hours on the game. So I feel that's why I don't like to use the word Web3, and I keep saying Finance Plus, because again, if you think about this industry as Web3 upgrade of Web2, you will be very disappointed, especially in this cycle. Many of the altcoins, or most of the altcoins, failed people's expectation. But if you think about what are the real solution or really like technology breakthrough that come out from this industry, DeFi is a good one. And then RWA is a good one. What are they building on? They are all building on Finance Plus. And that's why I call it Finance Plus instead of Web3, to emphasize on the fact that blockchain or tokenization is actually revolutionizing the finance world. And if we continue just, be hanging on the topic of decentralization, ownership, etc., you are just missing the right path. You are going to the wrong direction. But if we, really focus on what the TradFi is not necessarily good at, for example, lots of settlement at T+2, cross-border transactions, you spend like 4 to 5 business days, and 5% of the transaction costs were wasted in terms of transaction or forex costs. That's actually either WEF or someone's like research. But basically, there's so much things lost in the TradFi world when it goes to payment, stablecoin usage, financial trading, and that's the things that I feel we should be focusing on. Yeah,
it's a much bigger conversation for sure. Well, with just a few minutes left, I would love to just ask each of you to share about the next unconventional asset that you think will probably explode over the next few years on chain and where it might be going. So maybe we'll start with Pauline and work our way back.
Sure. When I was preparing for this panel, I was prepared to say like Pokemon trading cards, but Dominic here already beat me to it. So I think yet another unconventional thing that is going to be tokenized. Honestly, I think maybe some weird real estate type situation. I don't really have any other options. Call me unoriginal.
Yeah, and Dominic?
Yeah, I'm just gonna be a little bit original and gonna say Pokemon cards. Um, yeah, I explained a lot what benefits it brings to the hobby, to the world, even opens up a new way of investing. And this tech, this technology that we are all exposed to, just has no-brainer compatibility with this very asset class. So I'm super excited. Just a small note that we're launching today. We actually launched today. So I believe this is what marks the theory stops being a theory, but being a market starts being a market. Yeah.
Awesome. Yeah, go ahead.
Yeah, I think I'm going to take a slightly different take on it. There's been so many different terms used to describe this. There's been like digitization, assetization, now tokenization. And look, I personally think there's been a lot of things that are been tokenized that don't need tokenizing. And so my take on it is that we've actually seen a lot of unconventional uses. And I would personally say that it's tokenization done correctly, which will probably be the unconventional use case. And I think growing next year, we're going to see a lot of tokenization of the non-bank calls. If we look at current on-chain assets that are being tokenized, it's things which see it kind of makes sense. It's things like tokenized securities, money market funds. I think we're going to see a lot more non-bankable assets be tokenized. So sure, Pokemon cards is one, but I think real estate will have a huge play in things, natural resources, commodities, and then more particularly mines. The actual stuff which traditional finance is, they feel very comfortable with doing without digital assets. But now when you merge digital assets into that, I think that's where we're going to see kind of that non-conventional tokenization space go. So
Yeah, that's
a bit of a different take, but that's my input.
love it. And Gracie, if you have to find, we have to find out an unconventional one. I would say pre-IPO stocks. Bitget launched that with Republic Crypto outside of US, sadly, but we do allow retail users to purchase in like pre-IPO stocks, which was supposed to be for only like the big well players, family office, PE firms, etc. Today, our users outside of China, outside of the US, can start with $100, 100 USDT to invest in that asset class, and like 60 million allocation of SpaceX stocks were just oversubscribed within 3 days. So that's something quite interesting that I'm observing. But then I also want to say, from an exchange point of view, what we are watching in terms of our users' behavior is they, instead of only focusing on cryptocurrency, they started to build a portfolio. And I shared this story with Pauline earlier. And 1 year ago, we were in Singapore. Like Pauline and I, we were in Singapore.
No, it was Hong Kong.
Yeah, that was just right after Chinese New Year, and I was telling her that my son, his red packet from Chinese New Year, he just spent all of them on Bitcoin. That was last year. And this year, he received the red packet again, and he started to build a portfolio. In his portfolio, he has Bitcoin again, and then QQQ, which a tokenized QQQ, and then tokenized silver, and then a couple of tokenized money market fund. So that's a very, very interesting users portfolio in terms of having all the tokenized version of valuable asset classes and conventional asset classes in one account. And that is the future we are building and we are seeing. Yeah.
Can't wait to see what the next generation does. And you heard from some great speakers today. Please feel free to find them outside, chat with them. Thank you all so much for sharing your thoughts, and we'll see you soon. Thank you.
Thank you.
I see.